What's going on, guys? Welcome back to another video. In this video, we're going to be talking about Senseonics, ticker symbol SENS, and how they have three very important catalysts coming up in its near future, with one of these catalysts happening in just 2 days. So if you are a Senseonics investor, this is definitely an event that you need to keep on your radar because it could cause some massive price movements up or down in the share price. Now, in my opinion, this event is going to send Senseonics going higher. But with the overall current market conditions, you never know what is going to happen with the overall sell-offs in the market. We're also going to go over exactly what we need to expect out of some of the other catalysts from Senseonics in the near future. And we're also going to do some price analysis and market predictions for the market that Senseonics is in to decide if we should be buying this Senseonics dip. So before we get into all of that information, if you guys enjoy the information I provide for you in this video, make sure you go down and hit that like button and hit the subscribe button and turn on that notification bell so you're never late on any one of these new videos that I post. Thank you all to the 4,500 of you that have already turned on that notification bell. You guys are the best, showing love on all of my videos as soon as I post them. It really helps me grow on this channel, and I'm very appreciative for you guys for doing that. Now, just doing a quick price analysis of Senseonics, we've been covering this stock on this channel for about a month and a half, and we can see that about a month ago, Senseonics was trading at about 267, and even on this massive 13% down day, it is still trading at 354. So you are up about 50% on your Senseonics position if you were to get in at the time that we first started covering this stock on this channel. So you're still up a very significant amount, and in my opinion, this is a very good dip to buy, and we're going to go over exactly why that is a little bit later in this video. But nothing I say is financial advice. These are for educational purposes only. We got a nice article today that goes over some of the market expectations and predictions for continuous glucose monitoring systems, which is the market that Senseonics is in. So if we come over here, we can see that this report, added by Market Study Report LLC, focuses on factors influencing the present scenario of the continuous glucose monitoring market. Now, according to this latest study, the 2020 growth of continuous glucose monitoring will have significant change from previous year. By the most conservative estimates of global continuous glucose monitoring market size, most likely outcome will be year-over-year revenue growth of, they don't actually give it to us, but in 2020 from US 2,929.9 million, which is about 2.9 billion in 2019, there is going to be a massive growth rate. So over the next 5 years, the continuous glucose monitoring market will register at 21.3% CAGR in terms of revenue, and the global market size will reach about $6.3 billion by 2025. Senseonics is continuously gaining market share in all of the different markets around the world that need these continuous glucose monitoring systems to help out with individuals who have diabetes. We can see this growth in market share firsthand by Senseonics' efforts to expand into the European market with their distribution provider Ascensia. If we come over here, we can see Senseonics announces initiation of European commercial efforts by partner Ascensia Diabetes Care. So we can see today we are extremely excited to see Ascensia, a global leader in the diabetes technology space, begin distribution of the eversense XL in these key European markets. Now, these markets are Germany, Italy, the Netherlands, Poland, Spain, and Switzerland. If we come down here, in the US, Ascensia is already providing sales support for the original eversense continuous glucose monitoring system. Now, this is very important because in the United States, the only model that is FDA approved is the 90-day eversense. In Europe, they have already approved the 180-day eversense, and we are working on getting FDA approval for the 180-day eversense in the United States at the current time. So the first catalyst that we need to go over is this FDA approval in the United States. If Senseonics is able to get this approval sooner than expected, we are going to see some massive revenue growth numbers because they are going to be providing a brand new product into the market. Now coming over here, we can see that the setback matches what Senseonics has heard from other medtech developers currently trying to get their products reviewed. The company said, noting that there's still potential for the FDA to reach an approval decision before the end of 2021 second quarter. So we could see FDA approval by summer or sooner, which would be very good news. What's even more important is that Senseonics already has FDA approval for the 90-day CGM, and they're working on getting approval in the United States for the 180-day. They already have FDA approval in Europe for the 180-day, and they are working on creating a 365-day version of the eversense continuous glucose monitor approved by the FDA. I think that we could see this FDA approval by the middle of next year. So Senseonics, in my opinion, is a very long-term play. Now, they are directly competing with Dexcom right now, and we can see that Dexcom has a very high valuation. When Senseonics is able to siphon off some of this market share from Dexcom with a better product with a longer use period, we could see Senseonics go absolutely crazy, which is why I think this short-term dip in the share price is going to be a very good one to buy. Now, let's get into the catalyst that is going to be happening for Senseonics in 2 days. So coming over here, we can see that Senseonics, a medical technology company focused on the development and commercialization of long-term implantable continuous glucose monitoring systems for people with diabetes, announced plans to participate in the upcoming virtual SVB Leerink Global Healthcare Conference. So here's what's really important. Senseonics management is scheduled to present Thursday, February 25th at 12 p.m. Eastern Time. Interested parties may access a live and recorded webcast of the presentation on the investor relations section of the company's website at senseonics.com. So in this health conference, we are going to see and get some more insight on what Senseonics is doing in their efforts to further advance their eversense technology by getting their 365-day model out into the market. Now, that is going to be a big deal, and there are going to be a lot of things that Senseonics could possibly say at this conference that could massively increase the share price. So what we really need to focus on for the short term of Senseonics at this event is any comments that they make about their 180-day glucose monitoring system in Europe. So we're going to have to look out if they're going to mention anything about their sales numbers and how they've done over the last month, and any research studies that have come out about this product. It's a product that you can actually view your glucose levels from your phone, and it's a very interesting technology and is helping a lot of people. So when they are going to be presenting at this conference, we've seen this happen a lot with Bio-Nanogenomics, Nano Dimension, when they have any event, when they actually release any studies or piece of news from one of these conferences, it usually sends the stock price going much higher. The next catalyst that we absolutely have to cover for Senseonics is going to be its earnings report, and this is going to be happening within the next 2 weeks. So coming over here, we can see that Senseonics, a medical technology company focused on the development and commercialization of long-term implantable continuous glucose monitoring systems for people with diabetes, today announced it plans to release its fourth quarter and full year 2020 financial results after market close on Thursday, March 4th. So management will hold a press conference call to review the company's fourth quarter and full year 2020 performance starting at 4:30 p.m. Eastern Time. That is pretty typical, but this is going to be a big deal. Now, something to keep in mind, Senseonics has recently switched their distribution provider of their eversense products. So previously it was a different company, but they have recently switched over to Essentia, which controls the distribution of the eversense in the US and in Europe, as we have taken a look at before. So I think what we are really going to need to keep a lookout for in this earnings call is their guidance. So they are going to talk about the market for these continuous glucose monitoring products. We're going to see their actual revenue, and if they guide higher for the next couple of quarters and years, we are going to see a massive jump in Senseonics share price. So heading back over to the actual chart of Senseonics, I think that this dip is going to be a great one to buy. Senseonics has a lot of positive catalysts coming up in its near future. And let's go over a couple of ways that we can actually buy this dip. So you can outright buy this Senseonics dip at 353. If you have already initiated a Senseonics position and you want to average more shares into this position, I think that this 14% drop in share price would be a great spot to do it. We've seen Senseonics fall from its high at 530 over the past week. Now, I think Senseonics could go right back up to 5 or more, pending their FDA approval and this conference that is going to be happening in 2 days, as well as their earnings number. So if all three of these things go well, I think we could see Senseonics break some new highs. Now, there are a couple of ways that we can actually make some money on Senseonics without actually buying shares. So what we are going to be taking a look at right now is going to be selling some cash secured puts. So if you want to own shares of Senseonics at $3 and you think it's a little bit overvalued right now, even on such a sharp downtrend, you can sell some of these cash secured puts and make a very significant return. So if you wanted to sell this $3 strike for March 19th, you would have to put $300 up worth of collateral and you would collect about $38. That's a little bit over a 10% return in the next couple of weeks. And if Senseonics falls below $3, you would have to buy 100 shares of Senseonics at $3. But if you have some extra cash sitting around in your account and you have a position in Senseonics, this, in my opinion, would be a smart decision. The implied volatility on these contracts is very high, so this makes it a very good time to start selling options. So other than that, I think outright just buying shares of Senseonics would be a smart decision right now. This company, in my opinion, has a lot of long-term potential, and I don't think that you guys need to be freaking out about these short-term dips, especially if you got into Senseonics over a month ago and you're already up a very significant amount. So that is going to be it for this Senseonics update. If you guys enjoyed the information that I provided for you in this video, make sure you go down and hit that like button and hit the subscribe button and turn on that notification bell if you want to see more videos like this as soon as they are released. So I hope you guys are able to mitigate some of your losses today with the overall market downtrend, and I'll see you guys in the next video.